Hello, good morning. This is Mr. Ayazuddin S.Khan from Pune, Maharashtra State, India. Sorry for the gap between my last video and this video. I was busy with some other important work, so I could not prepare the video for you. Anyhow, I'm sorry. So now this video is about another basic thing, that is arm's length, arm's length price. That is in short, or this short form is ALP, A capital L capital P, arm's length price, arm's length price. So in this video, we will discuss this, what is this ALP and what for this ALP has come into the act. So let us go in brief, let us go to the background about this ALP in brief. Since the liberalization of the trade, the countries all over the world, they decided to remove the barriers of trade. And people can, businessmen can send their goods to other countries will send the goods to this man's country. Like this, all barriers are removed. So there is free trade between or among the countries. With this liberalization, I think even before that, even before liberalization and after liberalization, this thing, or this this entity, this popular entity called as MNC, multinational company or multinational corporation, whatever you want to call it, but it is MNC in its short form. So this MNC is working throughout in many of the countries through its branches or through its subsidiaries, or in simple word, through its business units. These business units are doing business for the multinational. Remember, for the multinational in majority of the countries. So there, these units, business units of the this MNC. MNC is the main corporation, who decides everything for the its units which are doing business in other countries, all over the majority of the countries of the world. So this this MNC controls these units for all purposes, and important aspects of the business. The MNC controls these I am telling you, these important aspects of the business of the its units which are doing business in other countries. And what are those important aspects of the business? That is control of management. They control the management, how to conduct the management of the business, this thing. And then it controls capital also, finance, capital. So these units, how much money it should give to each, how much money that MNC should give to its unit or its units. That thing also MNC decides. Apart from this, the most aspect which is related to our current topic, that is topic of ALP, that pricing of the product, of these units, or sale price. In other words, the sale price, at what price these units should sell its goods to other what you call other units, other its related units, other units. The structure is like the MNC and all units. So there may be transaction between the two units of the MNC. So at what rate one unit should sell its product or goods to other unit of MNC, at what price? So that MNC decide that price, and accordingly this entity has to follow one who is selling, the unit which is selling goods to other units of MNC. Then the selling unit should follow the advice or order of the MNC. You sell your goods at this rate or at this price, and accordingly that unit should obey the order of its MNC, and accordingly it should sell the goods to other unit of the same MNC. So this structure you please remember, because this is related to our current topic, that is ALP. So what happens, these entities, or rather MNC, they are very shrewd people, because one thing, we should not blame them. A businessman should be shrewd, isn't it? Businessman should be shrewd to do the business. His aim is to earn or get maximum profit from business activities. That type of shrewdness, this MNC has. So that shrewdness, that skill, that craftsmanship, this MNC has been utilized since its inception, right from the beginning. This MNC, remember the structure, MNC, its units working or doing business in other countries. This MNC, right from inception, right from beginning, it is doing business with all the skill and shrewdness. And the most important thing, and what is the purpose? Purpose is simple, that is, business purpose is to earn the profit, or suppose profit is coming, then maximize it. So that is the purpose of this MNC. Like other businessmen, they also pursue or follow the same purpose. Okay, so there is no wrong. In earning profit in a correct way, or honest way, or fair way, or just way. There is no harm. There is nothing wrong in earning profit or income through fair means. Okay, so this profit, this means employed by this MNC to earn the profit employed by the MNC should justify the earning of the MNC. So if they employ just or fair means to earn the profit, that is okay. But suppose they don't employ fair means to earn the profit. Who? MNC. We are talking about MNC at now, beginning, history, background of this topic, ALP, arm's length price. I will explain you afterwards. So this this MNC, what trick or dishonest way they have been using for earning the profit. That means is not honest. Means employed by or means used by this MNC to earn the profit or to maximize the profit is not fair, is not just. So countries of the world, they realize what is the dishonest way of means, what means that is the means which is not fair, what is that? So price is the most important thing for earning the profit as well as what you call maximizing the profit. You understand? So this price aspect, this MNC use all its experience earned up to that point and all its skill and all its dishonesty. I am sorry, that is the observation made by all countries and governments of all countries. That just I am borrowing their view and telling, sharing with you. So these MNC, they utilize this tool, pricing tool, to earn profit or to maximize the profit. So how they are doing this, what you call, using this price tool or pricing tool? First thing, they have opened businesses in major or important countries of the world so that they can have what you call lot of scope for selling their goods, isn't it? So first they opened the business houses in various countries through its units or through its, you may call it through its subsidiaries or through its branches. So first thing they have done that, so that they have got what you call a good backup of consumers or customers. They have got good backup of customers and consumers. That is first thing they have done. Then what is the second most important thing they have done? They are controlling prices. They are controlling prices of what you call this, of its units, its subsidiaries, its family members. They are controlling at what price they should sell the goods. That way they are controlling. So in that what you call strategy, in that plan, what they do, they ask one unit. They ask one, that MNC asks one of its units to sell your goods at particular price to another unit, which is also under control of MNC. That way they give the advice, price advice. And what is the purpose behind giving this, purpose behind giving this advice, price advice to these two units, at what price one should purchase and at what price other unit should sell to this, their unit. So what is the purpose? Purpose is simple. They want to avoid the tax. They want to avoid the income tax of the country where their selling unit is located. So that unit, suppose one unit is in India, another unit is in Singapore. So this MNC is sitting somewhere, third place. So MNC, because this is a controlling company of these all units. So this MNC will advise the unit working or operating in this, in India, you sell your goods to your sister unit doing business in Singapore at this price. So purpose is simple. And full of dishonesty, as observed by the experts, world experts, including our government afterwards. So that purpose is so avoid the tax, avoid the high tax. Here they are advising their Indian unit to sell at particular price. In other words, it means you show less profit and more expenses or more cost. imagine, show more cost, more expenses, and less income, less profit. So profit is less. You are showing more expenses, and you are getting, suppose your what you call cost is 100 rupees, and what you call this profit is 10. Your selling price is 110, but cost is not 100. In fact, just for example, in fact, cost is 60 rupees. So they are increasing the cost to 100. That means actually fair cost is 60 of that product or material, and they are showing the cost of that material 100 rupees. That means there is a gap of 40 rupees. Instead of 60 rupees cost, they are showing 100 rupees cost, and they add very small amount of profit in it and make the price. Cost plus profit is equal to price. So price for practical purposes, for showing less income, what they do, they show 100 rupees cost of their material and 10 rupees profit and 110 rupees what you call this is price of the product. That way they show. And in fact, if you remove from that 110, that is from that price, the what you call cost 100 rupees cost, and what remains profit is only 10. Actually, if you compare their transaction, this transaction with the market transaction, then this world governments have observed, and they have realized this is the way they play the dishonesty. Who? MNC. So what happened is, if this transaction, just now I given the example, if this transaction you compare with the market transaction, similar market transaction, then you will find the cost is not 100, but cost is 60, and cost is only 60, and profit is not 10 rupees, profit is 40. So 60, 40, where is this? Cost is 60 and profit is 40, and this what you call price is 100. So see the gap of profit, income, how much income, less income they are showing. So the purpose is to pay less tax. Purpose is to do this way, to do the transaction this way. MNC's purpose, if you ask them, or people are already, world governments already asked them, the matter is closed now, but only we have to read the history. So when world government asked them, why you show all these things, why you show the transaction this way, what you call more cost and less profit and less income. So they say, the reply is like this: we are doing tax planning. We are doing tax planning. That is the answer they have given. Oh, no doubt, tax planning, any businessman will, naturally, if his income is more. So naturally, and profits, he is earning like anything. So naturally, then everything is not that simple. When you profit is there, then another hungry man is sitting there. That is government. Government is sitting there. They also ask money. You earn this much, you give something to us. That is the what you call mandated rule, legislature, sovereign order. You pay this much tax from your profit. So what I am saying, telling you, this MNC country where their unit is operating or doing business, that country, if that country has higher tax system, that country rates of income is more, tax rate is more. So in such country, what they do, who MNC, the unit working there, operating there in that country where tax rate is high, they ask that unit show less profit, so there will be less tax. So this is the way they say. to avoid. When less profit means less tax. So tax saving is there. This is okay. There is no objection. Nobody has taken objection. That tax planning, there is no objection at all. Any businessman, skillful businessman will naturally plan his what you call, he will do tax planning in the sense he will say okay, how much my liability will be there, whether I can show whether my expenses are this much, what is my future expenses, all these things he will think and he will decide I can pay this much tax. So it is proper for me. The labor liability is there, then dispute liability is there, court dispute liability is there, then so many other things are there they have to manage. So a lot of expenses are there for them. So this MNC do the tax planning, that is okay, that is fair. But while doing tax planning, if suppose they employ dishonesty there, they use dishonesty. The example I have given you, you show less profit. Actually profit, if you compare their transaction with market transaction, profit is more, cost is less. But they are showing in the name of tax planning, they show more expenses or more cost of the material and less profit for the material, and accordingly price is fixed. So this is not comparable to the market price. This is market price is totally different. That means they are showing what you call they want to show dishonest and wrong way this what you call cost, and wrong way the what you call profit, and they want to show the less profit, and finally they want to pay the less tax. That is the planning. They are planning tax. They call it tax planning. Tax planning, okay, if it is done fairly or fairness is there in doing that thing. But it is observed, found by world governments and experts. These people, MNCs, they do not do in a this tax planning in a honest way. They have confirmed, it is confirmed. So that is why legislation is there for them. When you put up transaction to us for assessment, that this our for income tax payment purpose, when you put up your transaction for assessment or payment of tax, we will not accept your sale price. Will not accept your sale price. Sale price, remember this, sale price means cost plus profit is equal to price. Isn't it? Two components are there, two elements are there of the price. Price has got two major elements which make the price, and first element is cost and second element is profit. Cost you add. If you have manufactured something, so there is some cost. Technically they call direct cost, indirect cost, all cost of making that product. In that cost, then you decide how much profit you want to add. So after considering all your liabilities towards shareholder, liability towards labor, then your future capital requirement, and your what you call other business expenses, all these expenses, you decide and accordingly add the profit. That should be fair profit you should add. Okay. But this MNC, what they do, they don't add fair price. They don't show fair cost. True and fair. These two words rule the world. In this taxation world, all over the countries, this principle that your figure, cost figure, profit figure, price figure, this should be not only true, but it should be fair also. Remember this. This has got lot of meaning in it. Very important words. I think word that is the product of deep study of the experts and the Supreme Courts. Supreme Courts. They added the word fair to the true. Previously, that the companies, MNC or any company businessman should show true figure. True figure, only true figure. So they they were chuna lagane ka. Chuna lagana means they were cheating the government. They were cheating the government. They are showing what you call true figure. Take that true figure. These are expenses. This is profit, and this is the price. And this is the you then plus minus, then you get the profit. If you from price you minus the cost, you get the profit. This is, you remember, plus minus. Price has got two components. Cost plus profit is equal to price. From price you remove cost, you get only profit. From price you remove profit, you get only cost. Isn't it? So this way you remember this concept of price, concept of cost, concept of profit, and concept of price. And price contains two important elements, and those two elements are cost and profit. Cost plus profit is equal to price. So this MNC show fake figures of cost and fake figure of profit, and they cheat the government. And government, as governments all over the world, government has what you call got up from the sleep. Then they have realized, they have observed, and they have found that MNC is cheating us. MNC चूना लगा रहे हैं हमको. MNC is cheating us. So they got up and they made the legislation. And they say whatever price, whatever cost you show, whatever profit you show, whatever price you show, it will not be, shall not be accepted. Who will decide the price of your transaction? Who will decide? Government asserts. Who will decide? And this is the topic LP. LP is nothing but the pricing of the transaction. Pricing of the transaction. Official definition we will see. But for simple understanding, they have taken up pricing work to themselves. Who? Government. They have taken up pricing work of the transaction to themselves because of this dishonesty, chuna lagana system of the MNC. So finally, this thing has come in the act, which ALP, that is arm's length price. Arm's length price. Arm's length price means the price and true and fair price. The price MNC, the price of the transaction MNC is showing in their books of accounts, and the price of similar transaction, as you can find out from the open market. There is gap. There is a lot of gap between this same material but two prices. This price shown by the MNC is different. Their profit is less, and here market price you will find cost is less and profit is more. So if this market transaction they accept, for this they say to MNC, for this transaction you have submitted for assessment or payment tax, will not accept. We will compare with market price, and that market price means cost plus profit. So their profit is more, cost is less. Where you show what you call more cost and less profit, there they show less cost and more profit, and here you show more cost and less profit. So comparison make the thing clear for income tax department, and they say we will market price of the transaction, will accept market price of the transaction and not your transaction. So, because they are losing what you call revenue in the form of income tax, who government of the world, they were losing, they are losing, and they after चूना लगाने के बाद for number of years the government got up and they have taken action, they have come with legislation, and that legislation say this what your department, income tax department will use this pricing system. The official name is ALP, arm's length price, to find out the correct, true and fair price of the price of the transaction. This will decide hereafter, because we don't believe your pricing system or price of your transaction. Okay, so that is why this pricing work the income tax department has taken to itself. So this is the background, and then this point to be remembered here in the historical background of this arm's length price. Arm's length price means arm's length. Price means distance. The distance of the price as what you call found out by the income tax department or assessing officer from the open market. That price and this MNC's price, the distance should be arm's length only, very little. Arm's length means small, there should be small. The price, what do you call that? The price found out by the department, assessing officer, price found out by they get all the help. Huh? Remember this. They when LP topic is there, put in the book of law, then simultaneously they provided everything to them, to assessing officer, to find out how to find out the what you call your market price of the transaction submitted by the MNC for assessment purpose or payment of tax. So arm's length means that income tax department or assessing officer, the price suppose some transaction comes before him for assessment, he will not accept price of that transaction. He will compare it with market price, and that price he will take into account for assessment purpose. So the price as he found out, who assessing officer has found out from the open market, uncontrolled market, that again this is technical word or the special word used by our lawmakers. So this uncontrolled market, there is no control, government control over that market. So assessing officer find out the corresponding price for this transaction, and he accept that. So what you call how much difference is there? How much difference is there between the price shown, price of the transaction shown by MNC and the price as found out from the open market? This is only distance, only arm's length, only small distance is there. That means department says this pricing, what pricing you have done from open market, that is very near to the true and fair price of the transaction. It is very near. The arm's length shows, indicates or tells distance between the MNC's price and the market price of the transaction. The department says, or lawmakers say, it is very small distance, and if you want to how small, then arm's length price, arm's length, only the distance is this way between this MNC's price and the market price. And the market price, they assert or they tell this is true and fair, and this MNC's price is not true and fair. I told you background why they show what you call less profit to avoid the tax, and where tax rates are very what you call low, there they show more profit. There they show more profit and appropriate cost, because even they show more profit, there is nothing to worry about income tax, because rates are what you call lower side, on lower side. The rates are not high, very less rates of income tax. It is the sovereign policy. Every government has its own what you call taxation policy. Nobody can dictate them, you charge at this rate and that rate. So there are countries where tax rates are very low. So MNC, they are, because they are operating and doing business all over the world, so they have got enough knowledge which country has got low rates of income tax and which countries have got more high rate of income tax. So they compare and accordingly they do the business, sale transaction. So show less profit where tax rate is high. Show more profit where tax rate is low. Show more profit in country where what you call tax rate is low. So that way, this thing they call it tax planning. When they were challenged or they were asked by the experts and governments, what is this thing you are doing, why you don't show true and fair price of your sale transaction? So they say we are doing tax planning. So they agreed tax planning is okay, but your way of tax planning is wrong. That is that is not acceptable, because there is element of dishonesty is there in tax planning. Okay. So this is the history you must remember before we go further to discuss this what you call ALP, arm's length price. Okay. So arm's length price means the price that Act says. Act says, and in informal words I am telling you, Act says means the price of the transaction. It is LP is price of transaction between two uncontrolled enterprises. Arm's length price means price of transaction between two enterprises which are not controlled by anybody or which are not related to each other. Price of transaction between two what you call units, two enterprises. Price of transaction between two enterprises which are not related to each other. They are independent. That means market price. In our language, simple language, we call it market money. The market is should be uncontrolled. That is the condition, precondition. Market should be uncontrolled. Uncontrolled means market should be uncontrolled. It means, in my view, it is open market. And open market means there is no government control or there is no government pricing policy is made to play in that market. So government interference as far as pricing of the material product is or material is concerned, government is not controlling anything. But government can control, and actually in fact they are controlling pricing of some essential product or things like medicine, etc. as per my knowledge. So government controlling policy, price controlling policy is there, where what you call monopoly, they call it. One man is ruling the what you call market, and he controls the prices of the market. In such situation, to teach him the lesson to that man who is selling what you call taking the advantage of his what you call controlling position, he takes he sells its product items at higher cost, and people, because it is no option, they buy. So in that way government comes into picture, and they use their what you call legislative power, and they control the prices by law. You must sell, they tell, by controlling means they tell that man who is controlling market as far as pricing is concerned. You shall sell your product at this particular price. So that way government pricing control is there. But in our LP business, the definition is a transaction between two two enterprises which are not related to each other, or which are independent. That means, in other words, it is price of price in the open market, price of the product or transaction in the open market. And that open market or uncontrolled market means government pricing, control pricing is not there. Government's controlling pricing system is not working there, operating there. That is free. Market is free from control. So this this is the definition, simple. LP means the price of transaction between two enterprises which are uncontrolled in the open market, which are not related to each other. The transaction between two enterprises which are not related to each other, and they are operating or they are doing business in in the uncontrolled market. The government pricing control is not there. This is the simple definition. And in other words, for our understanding or during this lecture, I will use market price of the transaction. For simple, that is that legislature, the drafting people, they have to be, because they are afraid of they are very much afraid of interpretation by Supreme Courts, interpretation of law by interpretation of section, interpretation of topic, interpretation of provisions, all aspects. This drafter or law ministry or tax department, they are very much afraid of they are afraid of Supreme Court, in the sense when matter goes to them and that matter is for crores of rupees revenue is involved in that matter or in that case. So naturally, if suppose their drafting is defective, so naturally court will not spare department. So they will say, we don't accept this, your interpretation. This is the shortcoming. They don't do add something new. Supreme Court doesn't have legislative power. They have got only power of interpretation. So they do use the power of interpretation judiciously. That is again important word. Fair interpretation. They do fair interpretations of the provision or section of the Income Tax Act. And that is why these people, they are using very all technical words, relevant, connected to each other, topic, subject. So they are doing their duty because they are afraid of Supreme Court's interpretation if matter goes which involves heavy reunion of the government. So that is apart. So for our academic purpose, for our knowledge, in simple words, LP means market price of the transaction, sale transaction, market price of the sale transaction. That you remember in the simple. And I will be using this only market price term only, phrase only during this lecture. Okay. So this is this is about LP definition we have discussed. This is given, nicely given in the Act, no problem. Then transaction, what is LP? LP is transaction between two enterprises which are not related to each other in the uncontrolled market. So here transaction word is there, transaction. But LP, another important thing, LP, this pricing work through LP, this pricing work through ALP, as government act, the act says, this pricing work government has taken, or income tax department has taken to itself, not for all transactions, not for all market transactions. No, this ALP pricing system to be used, assessing officer will use ALP, that is market price system, only for international transaction, only for international transaction. And what is that international transaction? That is very important, very, very important. ALP, ठीक है, ALP there, but that ALP should be used to which transaction? All transaction or some specific transaction. So remember, this ALP to be used only for specific transaction, not all transaction. Transaction in the open market, or Tata, Birla and all these people, they sell, purchase and all these things here, there. So not those open transactions. This is transaction, international transaction means transaction between MNC and its unit, or transaction between two units of the same MNC. Such transactions only. When they do the business, they sell the item, and when that deal is complete, sale is complete, they submit transaction for assessment. So only that transaction, in that transaction only assessing officer use this ALP pricing system he uses. Who? Assessing officer he uses. And another important thing you should remember, this use of ALP is not applicable to all transaction. I mean market transaction. It is applicable only transaction between two associated enterprises, related enterprises. In other words, between units of MNC. These associated enterprises, or another good word or phrase is like this: unrelated enterprises. Unrelated means not related to each other. There is no MNC for them, and there are no units for them. Unrelated means this thing, unrelated. And so this ALP assessing officer uses for deciding the market price of the international transaction. And what is international transaction? It is between two related enterprises. It is between two related, and technical word is associated enterprises. This international transaction means a transaction between two related or associated enterprises. They are controlled by MNC. So only that transaction, for that transaction, when that transaction comes to assessing officer for assessment, only for that transaction he is mandated. I'm sorry, I'm using this is legal word. This is all illegal word only. They have to follow the rule of pricing system in the form of ALP. That topic is the ALP topic is there in the tax book, Income Tax Act. So that assessing officer has to use ALP pricing system for this transaction only, transaction between related enterprises. Why? So again back to history. Well, just discuss that history. Why? Because there is dishonest, that is established beyond doubt in the past also, and that habit is still going on. So that is the basic presumption of the assessing officer. Basic presumption that this sale transaction between two related enterprises this price of this transaction between two related enterprises is not true and fair. That price is not true and fair. There is element of dishonesty. Either cost is fake, or either profit is fake, or price itself is fake. So that is the assessing officer's basic presumption while when we go for using this LP. With that presumption, with that suspicion, he starts his work of assessment of business transaction, international transaction between two related enterprises. So here international transaction term or the phrase is very important because it means simple, it means what you call, this is a sale transaction between two related enterprises which are controlled by MNC. These two enterprises, sale transaction between two enterprises, and these two enterprises are controlled by MNC, and they play the trick on government, and they save the tax in the name of tax planning. They show less income. That is the so this assessing officer uses this what you call pricing method, that is ALP, only for international transaction. What is international? I have explained you. It is a transaction between sale transaction between two related enterprises. Okay, this is important. Then your what you call related enterprise and associated enterprise. Related enterprises and associated enterprises. This is also relevant. What we understand, if you bring before you the structure of MNC, MNC, as I told you, MNC is located in America, and MNC is operating through its branches or through its units or through its, you call it subsidiaries, whatever name you give. They are doing business through all these things throughout the world, and they are earning maximum profit. This unit, that is the structure of MNC. How they what you call earn the profit, and they become rich in the world. Okay, so after this what you call international transaction, we are discussing associated enterprise, that is related enterprise means they are two enterprises are related to each other, that is access, they are related to each other when one unit controls another unit. So here we have to bring before us the picture of MNC. MNC controls all its units. MNC controls all its units which are doing business in the other countries of the world. So that is associated. They are all units are associated, related units, isn't it? Their pricing, at what price unit should sell to another unit, that is MNC decides that thing, because they are the owner, they are the single owner, but working in the form of what all gods, all these are there, what you call, through their units. They dictate the pricing of the material or goods to this, at what rate one unit should sell to another unit, that is. So associated enterprise means the units of MNCs, isn't it? MNC control these units for all purposes, including your what you call pricing of. They have to simply follow, because the MNC is the owner. They take the what you call gown of the legal structure. The man is the same, but because of legal system, they are using this what you call form of doing business, that is subsidiaries, sister concerns, associated enterprises, related enterprises. They tell same meaning, that is they are units of MNC. Okay, so this is associated enterprises or related enterprises. Then we can, what you call, after international transaction, then associated enterprises. Then another important aspect of this, what you call this LP, is what you call this work of doing fixing the price of the transaction, international, the work of fixing price of international transaction, or work of finding ALP, arm's length price of the international transaction. Who does this work? This is simple, it is this assessing officer. Assessing officer does this work of finding the, if sale transaction is put up to him, then he will fix the price of the transaction, or he will find out the ALP, market price of the transaction. Okay, assessing officer he does, but assessing officer, though he is the man who is concerned, who is concerned about this fixing of market price of the international transaction, he has got lot of limitation. First, workload is there, and there is international transaction before him. Then the workload is there. A lot of he has to use his intelligence. He has to use his knowledge, skill, intelligence, everything he has to use. He's a tired man. So as far as international this is there. So he has to pass through all this, hurdleful jungle. He has to pass through all this hurdleful jungle and come to the destination. So simply hard work for him. So, and his limitations are also there. So whenever he faces this limitation, and whenever he thinks this is beyond his, whatever things are given to him that are not sufficient to help him to go near to the market price by comparison. Some international sale transaction has come to him for assessment here, and he tries to find the market price of that LP, market price of that transaction with whatever knowledge he has got, or with whatever skill he has got, and with whatever training he has received from the department, and with whatever written instruction manuals, everything he has got in his mind, but still he cannot decide the market price of the international transaction. In such situation, he hands over the case to another assessing officer, and his technical name is Transfer Pricing Officer, TPO. He is AO, assessing officer, and that gentleman is TPO, Transfer Pricing Officer. So work moves from that transaction, that international sale transaction goes from the hands of this AO to the hands of TPO, Transfer Pricing Officer. Now why then? Because heavy revenue is there in the form of profit. Government, international transaction, this is no doubt established beyond doubt, that every international transaction government gets lot of revenue in the form of income tax. So they have equipped themselves to not to lose that revenue in the form of this profit, in the form of that profit, because more profit, more income tax. So that is the revenue they get. So to get that revenue, government has set up everything so that they don't lose the revenue in the international transaction. That is one thing. So this with that intention that this gentleman has been brought into picture. Who? Transfer pricing officer. This transfer pricing officer, he is a specialized person, specialized, well-trained, specialized, skilled officer, and he has got minimum limitation. He is not working without limitation. He has got limitation. His job is equally hard. Everything is there, no problem. All problem. Nobody is free from problem. So whether you are in office or you are in the home, everywhere problem is there. Man born with problem and dies with problem. Anyhow, so transfer pricing officer, he is an expert officer to decide the market price of the international transaction, and he has got all tools, all resources, all tools, all market data, market information. If suppose personal transaction is there, so this transaction belong to which industry? Painting industry, or your what you call automobile industry, or software industry. Everything he has got market information at his fingerprint. Laptop or computer, everything is stored. Simply his assistant will bring you the required information. So in short, he is what you call, department has given him all the help to find out the what you call market price of the international transaction, and see that we don't lose, and government doesn't lose the revenue of this transaction. Revenue coming or will come from this international transaction. So that way this work is transferred, pricing work is transferred from transfer this pricing work to TPO, that is special officer, and he what you call this uses his market information and his training skill, everything, and he finds out the market price, which according to him is true and fair. Okay. So this is ILP work is done by these two gentlemen, AO and TPO. Then we have seen related associated enterprise, then seen international transaction, then what you call this work, who does the DLP work, finding out market price of the international transaction, these two people. Then you are what you call, another important thing we must remember, this price very important in this topic, price. So we must learn the basic elements of price. The basic elements are cost, then profit. These two, if you add, then you get the price of the transaction. You get the price of the transaction. If suppose some item or some product is coming into the market, then there is cost for production cost. The company which the manufacturer who manufactured this product, he has incurred, or rather he paid lot of expenses for making the product. And what are those expenses? As you know, everybody knows, that is spending on labor, then interest on borrowed loan, then what you call light bill, powerhouse, then salaries, advertisement, marketing, all expenses, direct, indirect, they call it direct, indirect, all total expenses. Production cost plus other expenses. Other expenses means indirect cost. So, then he adds profit in that cost. The adding profit in the cost is also important job for the manufacturer or the company. So this profit, how much profit to be added, it depends on the liability of the current and future liability of the company. So current and future liability decides the amount of profit to be added in the cost, because there is dividend payment, then there is expansion plan, then there is what you call opening of the expansion plan means opening of branches, another units, whatever. So then labor payment, employee salary and pay and allowances, all these things they take into account their liabilities, bank liability, then repayment liability is there, then interest liability is there. So they take into current liability, that means recurring liability, and they also consider future liability. In the near future they have to spend. Then there are court cases, disputes pending, where they have to spend amount. If suppose court orders to pay something to some party, then they have to pay. So for that also they have to make the provision. This is acceptable provision in income tax. So considering all this liability, they come to the some fair amount of profit, and the company add that profit to the cost. If you add cost plus profit, it makes the price of the product. Cost is 100 rupees, and according to you current and future liability 10. 100 plus 10, this is 110. You will sell your product. You will sell your product at the price of 110. When you get 110 rupees from the customer, out of that 110, 100 gone for cost. That is whatever amount you spend. So that is the cost it has come back to you. Then 10 rupees profit. Cost is there, then 10 rupees profit under that price 110. If you deduct this what you call 100 rupees cost, 10 rupees profit is there for you, isn't it? That profit you have to spend according to your planning. So this is important, the elements of pricing. There are cost, one element, profit, another element. If you add both, then you get the third element, price. So this is also, as far as LP is concerned, this is also important. So now this work, LP work, there are how to use this, what you call LP, how to find out the market price, that is LP, for international transaction. This legislature has given 5 methods. They have given 5 methods of finding market price or LP of the international transaction. And these 5 methods, assessing officer has to these 5 methods are at the disposal of what you call 5 methods are there for assessing officer use. So it is not random. There are five methods. Take one method randomly, and it is not like this. So the 5 methods are different methods, and these methods that when there is international transaction before assessing officer for assessment purpose, then he will take the decision. Then rather he takes the decision, out of 5, which method is relevant, which method is proper to use for finding out the market price of this transaction. He takes that decision. Which method to be used for deciding the market price of international transaction or LP. So he decides, judiciously he decides, carefully, very carefully he decides which method, there are 5 methods, which method he should use, and then he uses that method. So in short, the use of method, out of 5 method, selection depends. Selection of method depends. Assessing officer has to select any one method of for this what you call for assessment purpose of the ALP, international transaction. So it depends, that selection depends on the nature of transaction. Nature of transaction, volume of revenue or profit involved. So many other factors are there, and friends, you remember this international transaction is just like a lion. We don't go near to him. Lion, wild lion, we cannot go near to him. So for me, honestly, for me and many of you, it is difficult to have the glance of this international transaction, because they submitted to some special officer at appropriate level, and they are studied there. They find the price, market price, and they finish the work, and everything is okay then. So we are away from this, because we are not concerned with what you call international transaction. But still, I am treating is basic thing that may be somewhat wrong on my part, but this term has become important in the recent years, because many MNCs are coming here to India, and they are doing business, and they are earning lot of profit. Government is also giving them concessions, and so that way we must be aware. Myself and yourself, we must be aware about what is ALP and what is its history background. So assessing officer has to select one method out of 5. That should be another technical word. Remember, this is the word, this is the phrase, or this is the whatever words used by the legislature, drafter. So, this selection, if we complete the selection of this method, that should be, that should be precondition, that should be most appropriate method. See, AO has to select one method, and after selection he has to ensure to himself that the method I have selected, that the assessing officer is telling, the method out of this 5, one method I have selected, and that is government says or legislature says that method should be most appropriate to the transaction. It should be not only selection, it should be most appropriate to the transaction. This is also a challenging job. This is challenge. I think most of the officers, this income tax officer, they must be unwilling to go to this pricing section of international sanction. Even they are requested. They are the medical, send medical, or give some reason, and don't enter that janjat to find out the market price of the international, because it requires lot of reading, it requires a lot of time. Time factor is very important, though everything is what you call this computerization is there, data storage system is there, market information is there, magazines are, journals are, whatever you want, relevant, everything is there. IT, they call it IT, information technology. That is very appropriate, most appropriate word. Information technology, IT, whatever information, finger trick. Click, you get the information. What are the population of so and so country? Click, you get the population. See, this is the information technology, so useful to the modern people of this generation. Okay, so that method, that is after selection, he has to, assessing officer has to ensure that the method he has selected is most appropriate method to the transaction in hand. So that is one thing. So what are those 5 methods? Then what are those 5 methods? So first, another important thing before we go to these methods, 5 methods, another important, all these 5 methods, they have this one common factor or common element or common thing between all these 5 methods of finding the market price of the LP. LP means market price of the international. What is common among them is principle of comparison. Principle of comparison. Principle, remember, most important, principle of comparison. That is the foundation. That is the foundation of this ALP work. That is the foundation of ALP work. Compare international transaction with market transaction this way. So this principle of comparison is most relevant to what you call find out the market price of the international transaction. Okay. So this principle, the 5 methods have this principle in them rather. This principle of comparison are inbuilt in these 5 methods of finding ALP. Methods of finding ALP or market price of international transaction. There are 5 methods, and these methods have one thing common, that is principle of comparison. In every method there is comparison. Without comparison method, method nothing talks without comparison. Okay. So what are those 5 methods? There are 5 methods. So first method is comparable uncontrolled price. Comparable uncontrolled price. This is the heading of first method. This is the official heading of first method. In my knowledge, it simply means the market price. It simply means the market price. Now remember here, components or elements of price. Cost plus profit is equal to price. Now here, first method, comparable uncontrolled price, that is market price of the transaction. So what he does here, by using or choosing this method, assessing what he does, he compares the price of price, cost plus profit equal to price. That price of the transaction he controls, compares. He compares that price of international transaction with the market price of the similar transaction. The whatever nature of transaction there, if similar nature of transaction is there in the open market, and what is the price of that transaction, he will accept that price. With certain modification, he will accept that price, and he will tell, I have found out the ALP, I have decided the ALP, I have determined the ALP, arm's length price of international transaction. Or in simple word, I have found out the or I have fixed the market price of this international transaction. Okay. So this is the first method. This is again comparison, principle of comparison used or applied by the assessing officer. Okay. And cost plus profit is equal to price. So here direct price, he has come to price, and that price only he has compared. Okay. Then second method is your resale price method. Resale price method. See, resale price method. Here, assessing officer, what he compares, this principle of comparison. The principle of comparison to be read with elements of price. Cost plus profit is equal to price. Isn't it? So, first price, he has used that price for comparison. First, the transaction called for this thing. from assessing officer, you compare price, not cost, not profit. Price you compare. Price of this international transaction you compare with the market price of that similar transaction in the open market. So he used this first method and compares the what you call price only. Price aspect he only compares and he gets the ALP. Then second method is resale price method. Resale price method. In that method, see, first thing price is compared. Here in second method, he compares the cost. He compares, see the element of price. Cost plus profit is equal to price. Now, in first method, price is compared. In the resale method, he compares cost. Cost of purchase of property. Cost of purchase of property. He compared this cost, purchase cost of the property. He compared the purchase cost of the property with the cost of similar property in the what you call open market. If cost is international transaction shows cost of property 100 rupees, example, for example, and in the what you call this market, the cost is what you call less than 100. So he will accept market price, market cost of that property. Or suppose vice versa also, the cost is here, cost is resale price, cost is showing less or is showing less or is rather showing more. Normally more, they show more. As far as India is concerned, we will think of India only, means they will show more cost and less profit. So cost is more. So there he will find what is the cost, that is market cost of this property. So there they find, in assessing officer finds this cost is not this much higher, it is lower side. So he will accept that thing. When cost is there, that means profit is more, isn't it? So he will accept that cost after comparison. So this is what you call second method tends him to do. You compare cost, price element, cost plus profit is equal to price. First method, this what you call uncontrolled price, comparable uncontrolled price is the first method where price is compared. In the resale price method, cost of purchase of property is compared with the market price of such transaction or such property, and that is accepted as a market price of the international transaction. This is the two method. Now here in the second method, resale price method, there is what you call, I have that cost of purchase of property, that he has picked up from the elements of price, cost plus profit. So cost he has selected and he compares the purchase cost of the property with the market price, isn't it, of similar product or similar property. So this what you call property here, the word purchase cost of property. So this property, while I was discussing some important phrases in the beginning of this lecture, I forgot this term, property. Property also very relevant to this ALP work, ALP topic, and property means that property is defined under section 56 of Income Tax Act 1961. That definition gives the elements of property, land, building, all these things, jewelry, this bullion, all these things. We have learned and we have discussed also in the earlier video. So, you find the purchase cost of the property. Here, as far as this thing, this LP work is there, or topic is there, that definition is that thing, that as given in section 56. But apart from that, it includes The Act says, as far as this topic, ALP topic is there, it includes what you call these goods. It includes what you call your articles, and it includes intangible property. Intangible property, that is the non-physical property. Non-physical property, that is your trademark, brand, copyright, all these things are what you call intangible property. They are not physical property. We cannot see, we cannot touch. So that is intangible, and we cannot see. This is intangible property. They call it. They are all rights. They are all intangible is equal to rights only. So this is the remember this definition also, property. So in the second method, recent method, he compares the purchase cost of the property with the market, with its market price, and he accepts that market price as for deciding LP of the transaction. Then third is cost plus method. Third is cost plus method. Cost plus method. Now again this thing, elements of cost, elements of price. Cost plus profit is equal to price. In the third method, in the first method price is compared. In the second method cost is compared. In this third method, cost plus method, both the elements are compared. Compared. Both the elements of price are compared. And what are those two elements? I told you, very important. That is cost plus profit. Here in this method, in the what you call this cost plus method, assessing officer, he compares the what you know cost of the transaction. Cost of the transaction. Here property word is not used. Cost of the transaction. Whatever transaction, it may be sale transaction, that is what is the total cost and total gross profit. Cost and profit. That two things he compares under this method, third method. He compares gross profit, he compares cost, he also compares gross profit of the transaction, international transaction, with the market price of market cost and market profit of such similar transaction in open market. He compared that way. Both the things are compared. First thing, price is compared. Here second method, cost is compared. In third method, cost plus profit, both things are compared to find out the ALP, market price. Okay, these are the three methods. And fourth method is your profit split method. Fourth method, this legislature says you use this fourth method when transactions are multiple. There are no single transaction submitted to, rather furnished to this what you call given to assessing officer for assessment purpose. There are multiple transactions involved. Multiple transactions are involved, sale transactions are involved, and it is very difficult to find out the market price, or we call it officially it is LP of the each single transaction. So there are multiple transactions. When multiple transaction, then I told you. So assessing officer has to decide, he has to choose the most appropriate method to find out the market price of the international transaction. When he comes to notice there this whatever submitted has got number of multiple transactions and he cannot decide the price, market price of each single transaction, then he uses this method, which profit split method. Profit split method he uses, where multiple transactions are there. So how he uses this method? Again, our basic elements of pricing, that is cost plus profit is equal to price. So first method, price is compared. Second method, cost is compared. And we are discussing, I think we are discussing cost plus, and third method, cost plus method, both cost and profit compared, cost plus method. Now this fourth method, that is profit split method, only gross profit is compared. Only only net profit is compared. In the third method, cost plus method, cost and gross profit compared with the market price of the transaction. In the fourth method, that is your profit split method, not gross profit, the what you call combined net profit of all transaction, net profit, not gross, combined net profit, or in simple word, net profit of all transaction. That and net profit of all transaction compared with the net profit of the transaction is compared with the market price of such transaction. For all transaction, combined net profit, what is the net profit of all these such transaction. So he finds out the similar transaction in the open market, uncontrolled market, that is, and he accepts the what you call net profit, combined net profit of such transaction. They show less, there is more, so he accepts that thing. So here in the fourth method, assessing officer compare the net profit of all transactions, that is combined net profit. He compares combined net profit of all transactions simultaneously. Then again he splits, three times he splits. He splits and what you call divide among the all the international transaction with reference to their the word used by account with reference to their expenses. The expenses they paid for earning the transaction and earning the profit for each transaction. In the simple words, cost plus this profit profit split method. In simple words, profit split method means net profit of the transaction. Net profit of each transaction is compared with the net profit with the open market net profit of such transaction. This way, they what you call he compares under this method. Which method? Your profit split method. And then transaction wise net margin method. This is another transaction wise net margin. There was multiple transaction, take the total of net profit, all transaction का net profit लेना है, then you have to find out the market price of such transaction and then again break and come to the net profit of each transaction. That way that profit split method is there for combined all multiple. Then comes only single transaction. Then there he compares only net profit. He in the last fifth method, that is called, officially its name is what you call net margin method. Some net margin method. So in net margin method, net profit is compared. This international transaction, there is net profit. That net profit is compared with the net profit of similar transaction from the open market. That way he takes that property as correct and he comes to form the ALP, or market price of the international transaction. So these are the 5 methods, and we whatever I have discussed with you about pricing methods all day, in that case I invite you people and income tax department and all the concerned with the work of LB to enlighten me more. If suppose there is some omission, there is some omissions, or have left the track of the correct things, then they can point out me, this is not the way you discuss, this is not so, it is like this. So I will welcome, because I told you it is not our domain, it is not coming to, we are not going to that, their jurisdiction, it is not, because this is not common. These international transactions are very, what you call special transaction. for their special arrangement is there. So hardly we have got access. A common man like me has got access to such high transaction, high value transactions. Okay, so I think this is enough, and this is over. All basic things are over. Though this is not, last one is not basic thing. ALP is not basic thing. For you, I told you it is basic thing, but from with different purpose. Basic thing, it is not basic thing, but it is very relevant in the current current time of the of our period. Currently this term has got become very important, because so many MNCs have come here, and there are more international transactions, and more revenue to the government in the form of income tax, and tax department has got this what you call good. They have equipped. They have got all the tools. They have made available all the tools to fix the market price, so that they and make sure that they don't lose the revenue, because there is a source of high revenue. International transaction is a source of high revenue to the government. So they have equipped well. Now this ALP thing, they call it anti-abuse provision. Lastly, then I will close. They call it anti-abuse provision. ALP, they call it anti-abuse provision. Why? Anti-abuse. There is tax law book is there. In that they say how to prepare your profit loss account, how to prepare what you call your this balance sheet and all these things, and you show the true and fair profit. That is the MNC, they misuse this provision, showing true and fair profit. They play dishonesty in showing that thing. So what it means, they are not using fairly, truly and fairly, that system of showing profit for tax purpose, isn't it? They are not using. So what they are doing, they are misusing, or they are abusing. So this term abusing, remember this abusing means misusing, and correct use means true and fair amount of profit. They should show fair and true and fair amount of profit. They are not showing this fair and true and fair amount of profit. Then instead of using, they are misusing, or tax law says the word it uses, that is abuse of the provision. So it is anti-abuse provision. They don't allow this thing, dishonesty, to loot the government revenue. So MNC, they have been looting this. Then government got up immediately from the sleep, and they have taken action. And another important one, you remember, they have taken action. When lot of looting was done, when lot of revenue looting was done, then they have taken the action. And to describe these things, there is in English, there is one important word is there, that is proactive action. This proactive action. Remember this word, proactive. Proactive means to take action when something has done. When this is gone, what you call house is burned. There is fire and house is burned. And no action. Then after burning, they have taken, there should be one fire brigade in the locality and all these things. So that is called taking of action after something that happened. So that is called proactive action. So this anti-abuse provision, like other provisions, they are all what you call proactive provision. That is, they realize this afterwards. Okay, thank you very much. We'll meet again soon. But these all basic things are, my dear, all basic things are over. Now we'll go to what you call subject-wise income tax disputes and Supreme Court judgments on them, right from 1970 to 2020. We'll start this from the next lecture. Till that time, okay, goodbye.